Today's show is sponsored by Essentia Analytics, an award-winning fintech company that provides AI-driven behavioral analytics services to professional investors and allocators of capital. Essentia works with leading active equity investment teams to measure, improve, and promote their decision-making skill, and helps asset owners and allocators assess portfolio managers based on demonstrated investment skill, not just past performance. To learn more about their revolutionary approach to unlocking behavioral alpha in active equity management, visit essentia-analytics.com. Welcome to the Compounders Podcast. On this show, we explore the topic of compounding from various angles, including through interviews with public and private company executives, investors who focus on compounders, and newer investment firms that are building a business they hope will become more valuable over time. All opinions expressed by your hosts and the podcast guests are solely their own opinions and do not reflect the opinion of SNN or its affiliates. This podcast is for informational purposes only. It is not investment advice and should not be relied upon for any investment decisions. We are not recommending the purchase or sale of any securities. The host and guests may be beneficial owners of the securities discussed. You should not assume that the securities discussed are or will be profitable. My guest on the show today is Jeff Schwartz, the CEO of Dentity. Jeff has a long track record of success and has been the CEO of a number of public companies. Jeff's newest venture is called Dentity, a company that is attempting to make digital identities ubiquitous across the internet. In this fascinating conversation, we discussed how a self-described auto guy got into the digital identity space, the business model surrounding creating digital identities for people, why he enjoys building multi-sided markets from scratch, the role that AI is going to play when it comes to demand for verifiable digital identities, and the benefits of having a decentralized structure rather than one that is more centralized. And without any further ado, here's my conversation with Dentity's founder and CEO, Jeff Schwartz. Jeff, you've done a lot of things in your career. You've been the CEO of public companies. You also have an expertise in the automotive industry. I'm curious about the founding inspiration for Dentity.
Well, first, thank you for having me on your podcast, Ben. I appreciate it. I've enjoyed getting to know you. I've enjoyed learning and watching some of the podcasts. You do a great job on this. So thank you for having me. I appreciate it. Okay, so I guess the question is, what am I doing here? Like, why Dentity? What's inspired me? So as you noted, I've been CEO of 4 public companies. I've done, 24 startups. I can't really remember how many. I'm 58 years old. That's all this gray hair here. So the reason why we did Dentity, we've been doing it for the last few years, is really to solve a problem that I was experiencing in the car business, which is, I've got 25 years in the automotive internet, as you know. So we were finding this problem with, we're buying and selling a bunch of private party cars online. We have a 100-seat call center, and we're buying, cars and all this other stuff. And the through line, Ben, has always been that everybody on the internet is not who they say they are. Not everybody, but a large number. And so what I started to think about in that business was, how do I grow this business? How do I sell more cars? How do I buy more cars? And the through line, Ben, was if I could figure out the friction around identity, figuring out, who was real, who wasn't real, it would give me an opportunity to grow the business more. And then I looked around and I said, okay, well, what do we do? Is there an app? Is there a service that we could use? And there really wasn't one that was specifically geared towards the consumer, right? There's a lot of these, like enterprise software companies, and it's a big market. But there wasn't one that was specifically focused on the consumer and allowing them to verify each other, which was the nature of my business model. And so we built it. But basically what we've done is we've given the consumer this sort of access to this world-class ID verification tech that only like big enterprises have access to today. And what we found is that they really are eating it up. And it's not just obviously automotive. It's dating, it's Facebook Marketplace, it's Craigslist, it's inviting dog walkers to your house. It's this big, I'll call it the peer-to-peer economy, the sharing economy. And what your listeners, should understand, Ben, is that it's about a $500 billion account today, and it's going to be growing to about $1 trillion, almost $1 trillion over the next 10 years. So it's this $1 trillion economy, literally, $1,000 billion economy. It's huge, where people are interacting with each other. I'll call it the peer-to-peer economy, right? And the internet wasn't really built for that. It did not have, just internet does not have like a native identity layer, right?
Mhm.
The internet was built to connect anonymous machines to each other. And so, I always say that there's two original sins of the internet. One was there was no money, right? There was no native money created on the internet, right? And two, there was no native identity created. And so what we're focused on now, and there's all these great new, technologies and protocols and blockchains and all this stuff that allows us to do this business model that we really couldn't do this, 5 or 10 years ago. So that's why we started Identity, and that's why a car guy is in the middle of the, digital identity business today.
And given that you are a car guy, I'm curious about the skills you've had to learn as a result of being the founder and CEO of Dentity that you might not have fully developed in your prior experiences.
Oh God, that's I could take an hour to answer that question. So, the thing that I've learned, is that I've been doing this for a long time. 25 years in the tech business, as you said, 4 public companies. Um, the first thing I would tell you, Ben, is that a lot of the people that I've seen over these 25 years, I'll call them tourists. I call them tech tourists. So what they do is they come into the market and they say, "Oh, I want to start an internet company. Oh, I want to start an e-commerce company. I want to start a blockchain company. I want to start an AI company," right? And so those people basically are here for the wrong reasons, right?
Hmm.
They're here to use the technology, not to solve a problem. And so one of the things that, and I think you've seen my investor presentation, I don't mention the word blockchain once, not once in that investor presentation. And you know why? The reason why you're laughing, the reason why is because, blockchain is just part of the tech stack. It's, I didn't wake up one day and say, "Oh, I want to start a blockchain business," right? I woke up one day and I said, "I've got to solve this problem, this real problem that consumers feel in trying to create counterparty trust on the internet," right? And it just so happens that blockchain is an important part of how you solve the problem, but it's incidental, in the broader scheme of things, right? So that's one thing that I always talk about. The other thing, the other point, Ben, is collaboration. You know, Everybody wants to compete. Oh, we're all competitors, And my big thing here, is, because I've been doing this so long, is look, if we all compete, and if we all view this as one big great competition, consumers lose, right? Because what happens is we all compete, Ben, and what happened? We all blow each other up, right? And when we all blow each other up, who's there? It's the big tech platforms, and the big social media giants. They end up winning. So what I'm out, and a lot of the, not to be patronizing, but a lot of the people that they're young people that are, these sort of in this whole sort of Web3 digital identity space. And I always say, like, look, let's find ways to collaborate. Like, let's collaborate. Let's find ways to build great applications together that benefit consumers, because that's how we all win, right? I'm worried. I'm concerned about growing the pie. Making the pie really big. Like, if the pie isn't really big, if the pie is really big, then all you need is a small piece of it, and you're fat and happy, and you've created a great business, and investors are able to get great returns.
And so we've touched on it, but I think it's really important for people who are not familiar with the company and may not, think about this ecosystem that, on a day-to-day basis.
Mhm.
Maybe just describe to me from a very high level, what is a digital identity, and like what is the technology that enables said thing to exist?
Mhm. So I always say that digital identity is a how, not a what, right? So, when you say what is digital identity, it's very hard to sort of, it's not very tactile. It's not like, oh, it's a social media account, or something that you can really hold. So digital identity is this idea that, that you have the ability to own a set of your own data about you, right? And Ben, I want to make a clarification between identity and identifiers. Okay. most people think of identity as your digits, your social security number, your verified driver's license number, whatever. So that's a big part of it, right? Verifying your information, right? We do that. We're a verified identity company, and we do that for big enterprises, and consumers verify each other's information. So we give consumers the ability to verify their information. We can do, I don't know, 16,000 different documents in 200 different countries now, right? We do front of the license, back of the license. We have a live, process to verify, liveness and proof of presence. Then we create in essence, I'll call it a token, but it's really a credential. It's a verifiable credential that sits in a wallet that we create for you. And the wallet is a Web3 cryptographically secure wallet. Most people never even visit their wallet, right? They know their identity is something that they use to log into a website or use to prove who they are. So, but basically what it does, Ben, is it gives you this control over your data, right? And it gives you the ability to prove things about yourself online, right? Without having to, continually drop your personal information on another website and in another place, right? One of the problems that we're solving is this issue of on average, Ben, your personal information is in 300 different databases. Think about that. Ben Claremont, all of his information, 300 different databases, right? And you wake up in the morning and you see, another headline of 100 million data records stolen, Facebook 500, whatever it is. There's hundreds of millions of data records stolen every day. And all of that data ends up for sale somewhere, right? It ends up for sale on the dark web. And the reason why all that data is there, Ben, is because it's you continually having to prove who you are, right? It's a constant process of enter more data about yourself. So our approach is very different. You enter your data once, you never have to enter it again. When you want to share that information with a relying party, with a website, you do it in a very privacy protective way. Like when you log in with Facebook, right? You use what's called Open ID Connect, OIDC. When you log in with Airbnb or any other website, you're sharing all your Facebook information, right? Facebook owns your identity. Think about it. Facebook, Google, Apple, they own your identity. You log into a website and they go to Facebook, Apple, or Google, and they say, I need a copy of Ben's identity information. Well, that's ass backwards. It makes no sense to me, right? So with all this new sort of, decentralized technology that we have, advancements in blockchain, advancements in cryptography, advancements in digital signatures, you have the ability to, possess a copy of your digital information and use it in a very privacy respecting way. Now, the advantage of what we do, our decentralized form of data storage versus storing data in a big database is that, if all that data is stored in one central place, there's a honeypot, right? And honeypots always get, that somebody goes after the honeypot, right? That's why we have so much identity theft. In decentralized identity storage, there's a million. We have a million people on the platform. Let's say there's a million wallets, right? And you have one copy of it's asymmetric cryptography. So you have a copy of the key pair. The other key pair is stored, in the Microsoft Azure key cloud, and a bad guy would have to spend 100 years decrypting one of those wallets, not to mention a million of them. So that's sort of what digital identity is. It's the ability to prove things about yourself, to own your information, and to collect information about yourself that's not just your identifier. So, in my wallet, I have 100 different credentials. I have my, fact that I'm a member of AARP, the fact that I have a proven bank account with Bank of America, the fact that I have proven social media accounts. All those are verified attributes of my identity that I own and can use throughout the internet to prove things about myself.
And I think we've all become pretty cynical about all this stuff because our identities are bought and our identifiers are bought and sold all the time.
Right.
And it's like you've almost like throw up your hands and you're like, well, this is just kind of the this is the good and bad of the internet, and you kind of just have to live with it.
Right.
How do you get someone, what is your pitch to somebody who says they should care more about this and they should proactively like seek an identity solution versus just kind of having this almost like giving up on this topic because because it's so hard to police it.
Right, right. Well, so two things. There's a very utilitarian, practical appeal, and then there's appeal to the higher good. So let's talk about the utilitarian, practical appeal first. Um, if you're buying or selling something on the internet, okay, let's just talk about a use case, okay? And you know, somebody's coming over to your home to pick up a couch or a TV. Let's just use that case, okay? So you can't rely on the platforms, Facebook and the other social media platforms, to verify that that person is a verified user. You can't even rely on them to verify that's a human being, right? Because there's all this issue of AI and bots. We'll talk about that later, I know. But so you have a few different choices. You can do nothing and rely on intuition. Um, you can rely on ratings and reviews, which are consumer generated and can be completely stuffed. You can rely on a social media platform or profile, which, as we know, are easily faked. You can go out and spend a bunch of money and do a public record search, like Google, put the person's phone number in and go to one of these websites and spend money. Um, or you can use a service like ours. And there's, frankly, we're one of very few, if not probably the only service that's doing this now. So, and our service, by the way, is free right now for consumers. So you don't have many options, right? So in the use case that we just talked about, you have somebody coming over to your home, you're dating, you're inviting a service provider to your home. Um, you know, why wouldn't you go sign up for Dentity? It takes 2 minutes. You can verify somebody on the other end of the internet. I don't allow anybody onto my property. I have workers and service providers here all day long. I will not let anybody in my gates unless they verify their information. It's just a universal rule. And by the way, I have not had a single service provider that has said no.
Hmm.
That has said, oh, I don't want to verify who I am. I'm like, if you can't verify who you are, so I have your information on file and on record, and at least I have some deterrence against, a bad actor coming onto my property. I have my family here, then, by the way, then it's not the right relationship. That's the practical utilitarian appeal. The higher appeal is, look, you know that there was 30 million cases reported to the National Center for Missing and Reported Children last year? 30 million, maybe 32 million, more than 30 million. And do you know that a good number of those are online child grooming? Do you know what happens to, the hate speech and women and children? Do you know that last year almost $15 billion in internet scams took place? Do you know that romance scams are the largest source of crime for elderly people today? I mean, my point is I could go on and on. And so it's all of our responsibility. It's a shared responsibility for us to stand up for, a safe and civil internet, for us to stand up for, trust, right? Think about this. What is, you're a trader, you're in the financial world. What is the essence of commerce? The very essence of counterparty trading. It's trust, right? Unless you have trust, Ben, if there's no trust, there is no commerce, right? So think about a world where there's the trust just breaks down, right? I mean, how do we do business with each other, right? How do I know if you're a real person and if you're not out to try and scam me? How do I buy and sell something on the internet? How do I invite a service provider? How do I get in a car of somebody to drive me downtown today? So I guess my point is that we all have to stand up, Ben. We all have to stand up for this issue of trust and this issue of safety and civility, and that's the higher appeal. And I'll tell you that consumers use Dentity, and we have, I don't know, we probably have grown from 25,000. We're a new company. We had 25,000 identity credentials in 23 last year. No, 22. 400 or 500,000. So this business is 20xing, right? And I think the reason it's growing so quickly is because, first, all these practical use cases between people, and second, I think people are just sick and tired of the malignancies of the internet. They're just fed up, and they're just fed up, and they're just saying, like, what can I do? what can I do to make a stand up and vote for, propriety? And that's sort of why I think people adopt. I think there's a lot of different reasons.
So I think the use case for people having a digital identity is pretty obvious. But
Mhm.
that brings up the question in my mind, how does Dentity get paid? Maybe you
Mhm.
should talk about, maybe it'd be great to talk about their revenue model because you did say that consumers, it's free for consumers. So how does this become a good business for you and for your investors?
Just to be perfectly clear, I said it's free for consumers today. You missed the word today.
Today.
So there's two ways we get paid. First, we have I don't know, maybe over 125 enterprises that have adopted now, and so we're open to enterprise businesses adopting. Businesses, there's a market price for ID verification, KYC, know your customer, and we're getting some very we have like $1 billion lender that's adopted. We have I'll call it a major fintech who's very close to adopting. We have major use cases. AARP is one of our investors. We're working with them to solve romance scams and all these things that we talk about. So there is a market price for ID verification solutions, and we charge the market price. Enterprises choose us oftentimes because they like that reusability, that the consumer can do it once and they don't have to do it again. Consumers, this is a new category, right? We're sort of the category king of this new category of like consumer held digital identity that's reusable and all this stuff. We talk to our customers, our consumers, I'll call them, not customers yet, talk to our consumers quite a bit. And they get they have a high degree of value. The perception is that the product gives them a lot of value, and they've told us that they will pay. And so we're right now in the process of rolling out a freemium model where we're going to, take some features in the app that are highly valued and consumers want to use, and we're gonna put a little toll on that. And so whether it's $9 a month or $19 a month or $50 a year, we haven't determined that yet. But we're convinced that we can get 20,000+ consumers to be paying for the app this year. And that we're pretty confident that we can exit 24 with something around a few $1 million in exit revenue velocity. But and you and I were talking about this before the podcast, Ben. The real opportunity here, I think, is this is not likely to be a public company, at least the way I think about it today, unless we get some different dynamics happening. Likely scenario here is that we build millions or tens of millions of wallets on the platform, and that it's a great partnership opportunity for a big company that wants a consumer front end to some of the identity work that they're doing. So,
And just trying to think about the structure of this ecosystem. Are there players in the ecosystem, potentially incumbents, who don't want people to have functional digital identities? Like in some way they benefit from
yeah.
all this opacity and the risk. Talk to me a little bit about that.
That's an excellent question. And again, I could talk your ear off about it, but let me just tell you about the structure of the market. Okay. So there's, call it, 20, 30, 40, maybe there's 50 enterprise software companies around the world that sell ID verification solutions to companies, right? It's a $15 billion market. It's a big market. Now, what's happening is that market is just starting to consolidate. There were a couple acquisitions, this week, and it's just going to be a traditional market structure where there's going to be consolidation, there's going to be price reduction, price competition, and so those guys, Ben, would like their world to be, they don't necessarily want digital identity to be widespread and held by the consumer because they want to go to companies. They have a pay-go model, and every time you verify, you got to pay another $2, every time, $1.50, $2. So the cash register keeps
Mm.
keeps ticking for them. So to the extent to which, consumers, more consumers hold a digital identity, a reusable digital identity, and we begin to create an open, this sort of open market for digital identity, then their business models, they need to change, right? So if there's an incumbent in the market, it's the big enterprise software companies, but they're also natural partners, and we're starting to partner with some of them, where they can get their identity credentials into the consumer's hands. By the way, there's still an economic opportunity around reusing an identity, right? So it's not like you pay once and there's never any economic opportunity. So let me just tell you. So there's an originator. Let's say that you go to Chase Bank. Let's just use this example, and you onboard onto an account with Chase Bank. Okay. Chase Bank originates your identity, right? And they spend several dollars trying to figure out who you are, who Ben Claremont is. Okay, so they figure that out. We can create a digital credential of that identity, right? And then let's say that you go to Acorns, or you go to 7-Eleven, and you verify, you wherever you want to go to prove something about yourself. If there's a relying party that wants to use that identity credential that Chase Bank created, they're going to pay, right? There's an economic model that's being created, right, for verifiers, relying parties, for people to rely on that initial verification. And so ultimately, what develops here, Ben, is this sort of ecosystem, right? And we've got a number of patents in this area, and this is the sort of model that we're out talking about and using, where you have originators, you have relying parties. We lower the KYC costs for everybody, because every time somebody reuses that Chase Bank credential, Chase Bank will get paid, right? The originator, right, or the relying party will pay pennies compared to what Chase Bank has to pay. But over time, you use and reuse your identity credential, and that creates an economic model.
And it would occur to me that the big payment networks like Visa and MasterCard would be really interested in preventing fraud and like actually having, like a better identity infrastructure.
Yeah.
Is that, am I thinking the right way that there's a way to work with the payment networks in a synergistic manner? Or is that not quite on the radar yet?
The answer is yes, provided they view they have a vision of an open identity standard, right? If their vision is, we're MasterCard or we're Visa, and we already have all this data, right? And you can only use it if you're in a place where you're running on our rails. Then there probably is a limited, it's probably a limited ability to work with them, because we're interested in open identity. We're interested in everybody using, there's this W3C open identity standard. Everybody's going to use it. We're interested, and we've been building on that. We've had a dozen engineers working on that for almost 3 years now. We're interested in open identity to the extent to which it's a closed network, right? Where you have to be a MasterCard holder, or you have to be a company that uses Plaid, or you can only do it inside of Chase Bank or something like that. Then there's less opportunity for collaboration. But it's just going to take time for this to sort itself out. And my sense is that the benefit to the consumer, right? Ultimately, we're here to do something, to make it excellent for the consumer, right? The benefit to the consumer of being able to use their digital identity anywhere, right? Anywhere, to log into hotels.com, to log into Chase Bank, to prove their identity to MasterCard. The benefit of that to the consumer is so extraordinary that we're hoping that this type of model, this open identity model, is one that prevails.
In terms of the commerce side, this is another thing I think we become all very cynical about, is that if there's fraud on your account, right, either the banks or the payment networks are absorbing that, and it rarely, comes back to hurt you, right? So I guess I'm trying to get a sense of like, is there, how should we think about who bears that cost,
Mhm.
especially of like some kind of financial fraud, right? Like how
Right.
do you think about that and how, because I'm just trying to get like, there has to be a willingness to pay.
Mhm.
And tradition, we pay as consumers, right? Through, through all kinds of different mechanisms where there's basically where the payment networks, you know, charge a fee to them to a merchant, and part of
Mhm.
that fee is to compensate them for fraud and other things, right? So
Right,
I'm just
right, right.
that's
But
like
there,
we
but
have
but
it.
there, but just understand really quickly, there's two types of fraud, right? There's me just lifting your digits, right? And
Yeah,
just lifting your digits and using your credit card. And then there's, I'll call it first party fraud, which is, well, I went to that concert, but it wasn't really a good concert. My seats weren't really great. And it wasn't really, and then you charge back, right? So that's like you can't, you can't address that type of fraud, with identity. But what I would tell you is that um, you know AI presents. This is kind of where AI comes in, right, Ben? Because AI presents dramatically increases the scale and sophistication of fraud, right? And so, the one thing that our solution does, because it's a biometric solution, right? We run 100 different fraud scenarios on the document itself, front and back, right, to make sure there's not font injections and Photoshop artifacts, and then we verify the data that you input, right? And then when we do a proof of liveness. So the one thing that we're able to do is we're able to help merchants, e-commerce, providers sort of create another level of verification that goes beyond just I know Ben's digits, because I could find out your digits, Ben, in 5 minutes. Like I could find out your credit card information, where you live, your birth date, right? But it does not mean that I'm Ben, right? And so our type of digital identity solution, right, that includes a biometric proof of liveness, right, and authenticity of the document is another great way to fight fraud. Um, so does that make sense?
yeah. And so you mentioned AI. It sounds like AI has a role to play here when it comes to identity. I guess it could be both positive and negative, threats and
Oh
opportunities.
yeah.
Maybe talk about how you're thinking about the potential impact AI proliferation on the, I guess, demand or the need to have a digital identity.
100x, maybe 1,000x. It's hard to even estimate how significant it's going to be. But every day we see. I saw yesterday an article that there's been a neural network created that's producing 20,000 fake identity documents a day. 20,000 fake identity, and the documents are so good. The documents are so good. Well, it's a photo, not an actual physical document, right? But it's a photo that basically is so good that it can pass a lot of the KYC engines today. Where you run into the issue, Ben, is in proof of liveness. A 3D video where you have to move your head around and stuff like that. But deep fakes now are able to produce. You're able to create deep fakes that basically are able to do that based on photos and things like that. So the you have to assume that AI and the bad guys are always going to be, we're always going to be in a arms race with AI and the bad guys. And so today, more than ever before, you need a digital identity solution to sort through, to disambiguate, a machine from a human being, right? Because remember that, modern AI can pass the Turing test, which basically is the test to basically tell you whether you're a human or a machine, right? And in that world, biometrics, right? A biometric proof of liveness is more critical than ever before. It doesn't mean that a deep fake can't spoof a biometric, but our system is pretty damn good at detecting, deep fakes and biometrics.
So it would appear that we're at the precipice of potentially an even more fraught situation when it comes to, the people's safety on the internet, whether that's their own safety or their financial safety.
Mhm.
So, it would appear to me that it's, there's commercial solutions to this, but the government has some role to play here. I mean, are there regulatory or legislative solutions that would be really helpful when it comes to, people understanding the need to have some sort of digital identity?
Probably not on the consumer side. I can't really see that, but the legislation that's going around Washington right now is related to all crypto wallets and all digital, anything related to digital tokens and money, that there has to be a full KYC for all sort of digital assets. And that would be a significant multiplier of the number of people that held a digital identity. But again, Ben, if I go and I get a wallet with I buy some crypto and I get a wallet with Coinbase or something like that, and I verify my identity on Coinbase, because I verify it on Coinbase doesn't mean I can use it anywhere else, right? I mean, the worst scenario is that you have to verify your identity with every wallet provider, right? That would just, I mean, that would just be, that would just basically be returning to what we have today, which is, I have 350 passwords sitting in my password keeper. And instead of giving those 350 websites, my email address and a password, I'm giving those 350 million or those 350 websites a copy of my biometrics and my, it could be worse. Think about it. It could be worse. So we have to get to a decentralized, reusable digital identity where consumer can do it once. They can prove who they are, to 350 websites without giving all their identity information to 350 different relying parties.
So as you said, this is a new market, and anytime a new technology or solution comes, like someone needs to be a standard setter. There needs to be some rules to the game that hopefully in a kind of an open ecosystem everyone adopts, and then I guess that leads to the collaboration you talked about. Maybe you can talk about some of the standards, the digital identity standard tenets that you're actually trying to get out there.
Okay.
To spur that level of either cooperation or standardization.
Ben, let me ask you a question. Do you trade commodities at all? Okay. If you traded commodities, I would say, when you want to buy oil, what grade crude do you buy? Or if you're buying diamonds, what grade diamonds do you buy? Or if you're buying pork bellies, or if you're buying cattle, or if you're buying any commodity, right? My point is that anytime that you want to create liquidity in a market, which I define as buyers and sellers, right? Actively, counterparties actively buying and selling, you have to have a standard, right? In stocks, who provides the standard? The standard is that everybody, Reg FD, everybody has the same level of information, right? The standard is Reg FD, and there's accounting standards and financial presentation standards, GAAP presentations. Those are the standards. And so you can look at a small cap company and micro caps, as I know you work on those, and you can compare it to another company, right? Because they're reporting on GAAP, and there's Reg FD, and everybody should have the same level. There isn't asymmetric information, or at least the SEC regulations have been designed so there isn't asymmetric information. Everybody has the same information. Okay. The thing that we've been working on is, let's apply that same standard to reusable digital identity that's used and reused by enterprises, right? The big companies that want to use it and reuse it, use it and reuse it. Well, there is no liquidity in that market to use and reuse digital identity unless there's a standard, right? Because if I'm Acorns and Chase Bank, right? How do I know that we're looking at the same that we're looking at the same attributes? Does it have AML? Does it have OFAC? Does it have, is it compliant with the Bank's Secrecy Act? Is it compliant with, the Patriot Act? Is it, all these things, right? So what we've done, and we have a number of patents in this area, or I should say, we've applied for a number of patents in this area. We have not yet been examined, but hopefully we will be this year. What we've done is we've tried to create a common identity standard. And so if you need a KYC credential that has AML and OFAC attached to it, right? Then that would be a level 4 for us. If we do with all the notaries, for example, all the notaries that do, home mortgages in America, they don't need, anti-money laundering, BSA, Patriot Act compliance. That's not what they need. So we do a different level of a different standard for them. So my point is that what we're focused on is creating standards, these sort of, digital identity standards, right? That allow enterprises to basically trade, identity credentials, use and reuse identity credentials. And without going into, very technical details, we're focused on it. We think we're way ahead of it. We've been working on it for a couple of years now. We have a number of patents in the area, and we have a number of very interesting use cases where companies are using and reusing that standard and relying on it, right? So because, look, this is the thing, Ben. I don't need to know that Chase Bank was the originator of that identity. I have no, if I'm a fintech over here, I don't need to know who originated that credential. All I need to know is that it's a level 4 identity credential, and that we're the issuer of that credential, and that you can verify the credential using cryptography and digital. You can verify the authenticity of our digital signature on chain, right? And so if you can do that, then you can rely on that credential, right? And the provenance of who created the credential does not matter. Just like, if you're inspecting beef, it doesn't matter who inspected the beef, but that it's a grade A, or whatever the grade is, right? That it achieves a certain grade. You don't need to know who inspected, who the inspector was. You need to know what the grade is, and you need to know what the standard is, and that's what we're focused on.
In getting all of the players in the ecosystem, whether they're government or regulatory or payment networks or enterprises, to all agree on the same standard seems like a nightmarish situation that gives me a headache.
Gives me a headache too, Ben.
What is the mechanism for getting, and maybe there's some historical analog here, what is the mechanism for getting all of these players to kind of coalesce on something?
It's kind of the cold start problem, right? And the way we handle it is we're just getting people to adopt it. We're just getting consumers to adopt it, right? And the more consumers, this is the problem, is that we could wait a decade for banks to adopt it. We could wait, a decade for universities and healthcare companies and all these big, massive use cases, right? So that's not the approach we're taking. We're going out and we're taking our case right to consumers, right? Consumers are using our identity credentials. They're creating of them. They're creating 1,000 people a day, or whatever number sign up today. 1,000 people a day are using them. And soon 5,000, and then 10,000, then 100,000, and then 1 million, right? And the interesting thing is that every day, more and more consumers, they share it with each other, right? They're dating and they're buying and they're doing all these things online. And every day, more and more, we see more and more, the source of our registrations are consumer to consumer. And so what that tells me, think about a virus. Think about a virus and think about, the R naught. The R naught is the sort of replication rate of the virus, right? And it's the same thing here. So, more consumers are using it, more consumers are sharing it, more consumers are using it, sharing it, more enterprises are adopting it because more consumers have it and they can reuse it. And so that's sort of, you just sort of start, by just, working on use cases where there's high value, people will use it and reuse it. And then, you don't, in my view, you don't wait around 10 years for banks. You just basically start doing it today. So that's the approach we're taking. We're proving value at the consumer level. And then at some point, there's going to be a black swan event here. I mean, I have no question about it, whether it's sort of a good black swan event or a bad black swan event, right? There's going to be a black swan event where, let's talk about a good event. Somebody listens to this podcast, and they call me up and they say, we have a use case with, a million consumers a month or something like that, right? And we're like, I always say, stay ready so you don't need to get ready. We were talking about this before. So we're ready. We're ready. Our tech is ready to go. We're ready. We're ready for that million, use case scenario. That's a good black swan event where there's and by the way, one of these big fintechs that we're talking about, I was telling you about offline, that's a good black swan event for us. There's also a bad black swan event scenario where something really bad happens in the market where people wake up and go, damn it, like we really have to deal with verified people online because look at this, look what happened here. Something bad happened to somebody or something. So there's some bad event. It's unfortunate, but it may be the case. So we're ready. So we stay ready so we don't have to get ready. And I have absolute confidence that we get to 2.5 million wallets faster than we got to 250,000. And then from there, I'm confident that we get to 10 million faster than we got to 2.5 million. So that's the nature of this sort of, viral kind of network growth model. And we just got to let it play out.
And you mentioned being very comfortable with dealing with cold start problems. I get the sense that these 0 to 1 type businesses are really attractive to you. And I get that it's great to build a two-sided market, but it's also really hard to do that. Why do you like this challenge so much?
Ben, it's actually a three-sided market. I mean, think about this. So it's not just buyers and sellers. In our case, we have issuers, right? Think of it, the organizations that issue the credential. Think about the DMV or the credit card company. There's the holder, right? You hold a credit card or hold a license, and then you go into verify it. You go into the local gas station, or you swipe your card or you present your ID. So issuer, holder, verifier, right? There's a lot of networks that have been built right now that only have two of those three pieces of the triangle. The real difficult part is a three-sided. So it's even more difficult, Ben. You don't just need issuers and verifiers. You need issuers, holders, and verifiers, So, so notwithstanding the complexity of doing that, what I would say, Ben, is that you just start with use cases where you can stand up all three parts of the triangle. You start with I'll call them identity networks, like little networks, right? I always say that it's easier to create a network in a classroom than it is on a football field. So, think about the world as a classroom. Okay, there's classrooms all over the place, right, where everybody can use and reuse and verify each other, right? So, we have a use case I'll tell you about. We signed a deal with the largest Facebook marketplace group for sellers. There's 20,000 members in it, and it's a Facebook marketplace group, and all they do. It's the largest. All they do is they just talk about sell it, being a Facebook marketplace seller. Well, that's a classroom, right? That's a classroom of 20,000 sellers that are speaking with millions of buyers every year. And we're very busy in that classroom, very busy, proving the value of sellers, badging their stores with verified sellers, saying, hey, I'm only going to deal with verified buyers, giving the buyers the ability to verify. So I guess the long answer, Ben, is it's difficult to build a marketplace. It's even more difficult to build a three-sided marketplace. But the way you do that is you start with classrooms, not football fields. And that's what we're doing. We're starting with classrooms.
And if I have to think
Does that make sense, Ben?
Yeah, no, that makes a lot of sense. And also, like, whatever you can think about other players who have been successful in establishing a brand and specifically focus on identity. And when I think about that, I think of someone like Clear, which is a product that I use, and I don't know, seems all right. I don't know if it's perfect, but I mean, what can you learn from what they've achieved and maybe their model or their approach or their
Right.
customer education? What can you learn from what they've done that can be helpful as you're building Dentity?
It's an entirely different use case, right? It's a hardware-based model. It's high friction, high barrier to entry, things like that. And it's also a central identity model, right? Because all that biometric and identity data is stored up in the Clear database, and you can't reuse your Clear airport identity anywhere else, can you? You can't, right? So their model is, how do we get people to pay $79 or $179 for airport access? They're solving a very different problem than we are. But they'd be a great partner, right? Because obviously they got millions and millions of people using their service. It's a biometric service, which comports with our form of identity. But you can't use Clear to prove your identity to somebody you're buying or selling with on Craigslist or Facebook Marketplace or dating, can you? Right? And so, the Clear model obviously is fantastic. They're a phenomenal company and they're enormous. But we're just we're just solving a different problem. You know, we're not solving the problem of airport access, and they're not solving the problem of creating Olympic levels of trust between people, strangers online. You know, we're just solving different problems. But look, in terms of what do I have to learn? They have a very tight, small, limited use case, airport access, and they've done a phenomenal job at it. That's what we have to learn.
And as you think about this business, and obviously you are working on the revenue model, especially from moving to getting consumers to pay. I'm interested in what this business looks like as it scales. Is this look like a typical software business, super high gross margins and high operating margins, limited capital? Talk to me about what this looks like from a financial profile as it starts to scale.
Yeah, I mean, what I would tell you is that we've been able to onboard whatever, 500,000 identity credentials. We have, I call it, 12, 13 software engineers, and we have, I'll call it 4 civilians. Civilians meaning non-engineers. And we have a dedicated customer service person that gets about 10 phone calls a week. And that's with doing thousands of these a week. So the system works perfectly. I mean, the system works great. Consumers understand it. Occasionally we'll have some friction around, related to the device not working, lighting, whatever, things like that. So the answer to your question is yes, it scales, it grows and it scales, and it has very high margins because there's not a lot of human capital here. It's just, and by the way, the other thing, Ben, is that the more this consumer to consumer, consumers referring consumers, which is clearly what we see and what we're built for. The CAC on that, the customer acquisition cost, is basically zero. So the answer is yes, it scales. Yes, it has very high margins. And the thing that I think about is not, I don't really look at this as a traditional enterprise software company. I look at this as a precious asset, a precious asset that will be ultimately probably used to plug into some other monster identity company or consumer company that needs a front end with millions and millions of consumer wallets. Let me tell you, it's not easy to get a consumer to pull out their license, do the front, do the back, and prove and then hold and create this wallet. It's not easy, right? What we're doing is precious. We have the trust of the consumer, and soon we'll have the trust. Hopefully this year we'll have 2 million, the trust of 2 million consumers that have entrusted us to hold their digital identity, right? That's a very valuable position to be in the market, the place where consumers trust their identity information. And that's what we ultimately think is the most strategic spot here. Now, that's not to say that we don't build a great enterprise software business. We will. But right now, if you ask me, Jeff, in 12 months, you could have $2.5 million of ARR or 2.5 million consumer wallets. If you ask me that question, I would say, I want 2.5 million consumer wallets. Because look, our burn is very low. I mean, we've only raised $3 million of capital in almost 3 years, right? So it's not like we're burning, $10 million a year, right? We're burning, $1 million, $1.5 million. We're burning, less than $1.5 million a year. I mean, it's an exceptionally capital efficient business. And so my focus right now is, how do you build the largest number of consumers that have wallets on your platform?
And I had a question about a credential. It would occur to me that, once I have a credential and it's being used over and over and over again, and there's been more and more positive transactions or relationships associated with that, is there some element where a credential becomes like, I don't know, stronger or more highly rated or more valuable the more people use it? Like there's more trust associated with someone who's been doing this for 3 years versus me just starting today?
Yeah. So what we do is you got it exactly right. You're thinking about it exactly right. So on LinkedIn, I have 20,000 connections. Okay. You would probably think a little bit differently of me if I had 200 connections. You wouldn't think lesser of me as a guy because you know me and you're like, yeah, Jeff's a good guy, whether he's got 200 or 20,000 connections. But you would say, look, Jeff is clearly a trusted guy in the communities, in the business communities that he works in, because 20,000 people, look at his content or rely on his content. That's probably an accurate, right?
Yep.
So it's the same thing in identity. The more people, the more trusted connections you have, the more counterparties have relied on, have verified your identity credential, right? We keep track of that. You got 100 connections, 1,000 connections, things like that. We call them something different, but it's the same concept. So we positively think, and we're ultimately, Ben, we're going to gamify this, like make this a little bit more social in the app and a little bit more fun. Like look at Venmo, right? Venmo took the most boring category in the world, money transfer. Like, like poke a fork in my eye, right? It's the most boring thing ever, but it's fun, right? It's social. You can see who's paying who. You can do emojis. You can have fun on Venmo, kind of, right? So we're kind of doing the same thing in identity, right? Which has basically been like, kind of a taboo, boring subject. And we're making it fun. People, they vouch for each other, they interact with each other, they rely on each other. We gamify it. We have like, contests to see how many people have more connections, things like that. So you got it exactly right. It's the same thing.
And I mean, it just appears that there is a very long runway for growth here and, a model that scales. If for some reason this doesn't work, what do you think? What do you think was that reason? What do you think holds this back from Dentity being extraordinarily successful?
I don't think. I think it's probably capital, access to capital. Like we weren't able to create like the right access to capital. I think the big platforms. There's no imminent danger from Google or Apple right now. Like I'm not worried about Google or Apple because they're going to do they're going to do what they're going to do, and we're going to do what we do. And the Apple Wallet, is not a Web3 credential. It's like it's a point of sale. Like you walk in and like you touch something with the Apple Wallet. It's not like this. It's not on like Web3 rails. So it's very different. I think probably access to capital. I think that we're assuming that the market's going to take some good amount of time to develop and mature. That it'll take us some amount of time to prove the value to consumers and to get them to pay. The enterprise market is already like we didn't start this business to disrupt enterprise KYC. It's already there. We'll get our enterprise revenue. Yeah, it's not going to fail because we don't get enterprise cases. It likely I would say the biggest threat to the company is just not getting access to the right amount of capital over the right amount of time. It may take us some number of years to let this market mature and develop.
And on the flip side of that question is about success. So if we're having this exact same conversation in 7 years, I'd be interested in what you would define as success.
Well, let me tell you, I had an office down in Venice. I had an office down in Venice on Market Street, and there was this little company down there, and it was a group of guys, and they built this stupid little app, and I was like, what does that app do? It's 10 guys, some girls, 10 of them. And the company was called Instagram, and they didn't have a penny of revenue. And there was about 10 of them, and they had 30 million users. And that happened really fast. And obviously, how the story ends with Instagram, right? They got bought for $1 billion. If they sold today, they'd probably sell for 10 billion. But their approach was like, look, the thing that I've learned about startups, Ben, is unity. You can have a unitary purpose. Like you can't always drive adoption and build this incredible revenue model, right? It just takes time. Like as a small startup, you kind of get to focus on like one thing and you need to do it really well. Right now, we're focused on adoption. Okay. So the long answer to your question is in 7 years, likely, we've got, if we do this right, we've got 50 or 100 million users, and we're part of some big, massive platform, and consumers use their identity, digital identity to log into Facebook and log into hotels.com and, log in to prove things or use it to prove things about themselves, when they're buying and selling online. That it's just, It's just like any other account that you use to navigate the internet, your Facebook account or your Google account. Um, in order to get there, right? In order to get there, likely will probably be part of a much larger platform. But in order to create that sort of relationship, ultimately, we got to prove that consumers will use it and reuse it, and that's kind of what we're focused on. So,
And I
yeah,
want to speak.
I always say, Ben, the fastest way to make a lot of money is to take a long time doing it. So we've been at it 3 years. It wouldn't surprise me if we're at this for another few years, proving this out. But it also wouldn't surprise me if digital identity is so hot right now. It's such a hot space. Also wouldn't surprise me if there was a partnership opportunity that was attractive to our investors, in advance of that 7-year line that you just spoke about.
And as you were talking, I was thinking about other revenue models. So I want to sneak in one question about that. I mean, you talked about there are people who click the register every time there's a KYC event of some kind. I mean, is there a transactional revenue model here on top of the subscription side, or is that too similar to how the incumbents act, and you would much rather have more of a focus on a subscription
Yeah,
model?
I think picking the pocket of the guys that make money in transactions is probably not where we're probably going to be. But think about this, we get requests every day for, hey, do you verify, background? Hey, can you verify somebody's education? Hey, can you verify somebody's employment? There's all these things that are sort of very highly adjacent to identity. Um, we do a bunch of stuff in music and ticketing. We do a bunch of stuff in, age verification. There's a bunch of stuff we do that is adjacent to proving who you are, that I think provide lots of revenue opportunities for us, once the platform gets fully developed. And but I think that's more likely the scenario. I think there's subscription, and I think that there's adjacencies, like employment. There's going to be something that happens in credit at some point. All this credit information is going to have to get decentered, at some point, right? Just think about the credit bureaus, right? Every time you get access to your credit, it's your credit file. It's your fucking credit file. You know what I mean? But every time you get access to it, you got to pay for it, or somebody's got to pay for it. It's absurd, right? And think about your education degrees. Like, if you wanted to go back and get a copy of prove your fancy degree from UCLA, you'd have to pay for it. You already paid for your UCLA degree. Why do you have to pay for it again? Right? So there's all these, like, think about, like, you scratch your head and you're like, that doesn't make sense, right? So think about all those things that don't make sense, that ultimately could be baked into some sort of model here at Identity, where you hold all these identity credentials,
That's actually where I was going in terms of my question about incumbents, right? The credit bureaus are an incumbent there who do not want everyone to have an open source identity or an open source, credit profile that they don't have, that someone doesn't have to pay for every time, right? That was where I was going, where there's just these legacy business models that ring the cash register because of all of these things that are like historical artifacts that don't make sense.
Right. But you got to think about it a little bit differently, because it may be that there is a model that allows you to decenter all this information, all this credit information. And it may be that the model is even more attractive, more financially lucrative to the incumbents, right? So, the very smart people in this industry say that that digital identity is going to be a $250 billion industry over the next 5 years. So the way you get there, right, is by thinking about all the different revenue opportunities around, home ownership and credit and auto ownership and, account onboard. I mean, there's a million things that we do where we have to prove our identity, right? And yeah, there's just tons of revenue opportunities here.
So Jeff, this has been great. I think we've done a nice overview of the business model, the reason why this business exists, which I think you've established pretty well. So we'll close with the question we always asked our founders and CEOs. What do you think is the most misunderstood or underappreciated aspect of the opportunity Dentity has in front of it?
What I would say is probably that, KYC and identity is something that, kind of people do to us, because we're used to like, oh yeah, I know what that is. I had to do it last time I, logged into created a bank account or something like that. The thing that I would say is think about all the times that you need to prove who you are, right? Or you want to prove who somebody else is. Think about in your daily life, right? Everything from, getting in an Uber to inviting a dog walker to your home to, hiring a caregiver for your parents to, buying or selling something online. Think about all the different use cases, where if you said, God, it'd really be nice if I could, if I had absolute assurance that what I'm doing right now is like I'm doing it with like somebody who's like a real person, like really verified, and I could rely on it. So probably the biggest misconception is that identity is something you only do once. Like I only need to do that when I start a bank account. Well, I create a bank account once every 5 years. It's not that useful, right? But think about, Ben, all the different ways that we need to prove and create counterparty trust in our lives, both online and offline, right? Then you can start to think about the magnitude of the opportunity, and the fact that a lot of this stuff doesn't take place on the platforms. Like it's really like, it's you doing it to somebody else, or you wanting to have trust with somebody else directly. That's probably what I would say is, get people thinking about that, right? And in that world, and then smash that against AI and the fact that we're not going to know, everything is going to be in question. Everything is in question with AI, right? The growth of AI. And there's got to be some baseline truth. There's got to be some like all these platforms have all these ratings and reviews and nothing's portable. Everything is specific to the platforms. We need something that's portable, something that you own, something that you can take anywhere with you, right? And by the way, it doesn't mean, pulling out your license every 5 minutes, that's like massively oversharing. So that's the thing that I would ask people to think about. And that's the magnitude of the opportunity that we see and the magnitude of the technology that we're bringing to bear in the solution, right? It has the ability to handle all those different use cases.
And if a consumer business or a venture investor who's interested in learning more about Dentity and wants to learn more, where should they go? I'm going to hand it off to you to direct.
Okay, great. So if you're a consumer, go to dentity.com, dentity.com. That's like identity without the I, so dentity.com, and sign up for a free account. If you're an investor, partner, anybody that wants to learn more, I would say go directly to LinkedIn or my email. So my email is Jeffrey@Dentity, Jeffrey, Jeffrey@dentity.com. And I'm easy to find on LinkedIn, Jeffrey Schwartz on LinkedIn. So just hit me up on LinkedIn or send me an email. And we're definitely raising capital, and we'd love to talk to interested investors. Valuation right now is very attractive, and we have a very easy way to get involved and invest.
Wonderful. Jeff, thanks so much for being on the show and giving this deep dive on digital identity. I've learned a lot doing due diligence for this interview and then also talking to you about it. So thanks for your time. I really appreciate you being on Compounders.
Thank you, Ben. I really appreciate it. And I thank you for the opportunity to be on this podcast. Take care.